GetCrack. Wake up, motherfucker.
A whole new world of artificial intelligence is emerging in the form of physical AI. Analysts are floating that it could become a multi-trillion-dollar industry, but investors remain skeptical of this utopian technology. Search bots started this AI bull cycle, and companies are now pioneering agentic AI, like customer service representatives or research and coding assistants. Breakthroughs are now speeding up the development of applications in the physical world, like humanoid robots and autonomous drones and cars. One Goldman Sachs analyst told me physical AI has added an extra leg to the stool in the build-out of artificial intelligence. These new innovations could create more AI investment opportunities in robotics makers, auto suppliers, and specialty semiconductor companies. Just a few publicly traded American and Chinese electric vehicle makers like Tesla and XPeng are leading the burgeoning humanoid market. And of course, NVIDIA is a huge frontrunner in agentic and physical AI. Uber, along with Mobileye, a driver assistance tech maker, and Aptiv, an auto parts supplier, could be beneficiaries too. That's not even to mention the billions that are being pumped into hot startups. Looking ahead to the next few decades, there's huge opportunity alone in humanoids, which pockets of Wall Street forecast will start replacing human workers at scale by 2030. Some analysts say that there will be an even bigger market for these machines than for robotaxis and self-driving vehicles. Major firms are already placing big bets. Morgan Stanley estimates the humanoid population will be 40,000 by 2030 and swell to 63 million by 2050. Still, investors and industry experts can't agree on the best use cases for some AI technologies, especially humanoids. There's still no exact timeline on when the physical AI opportunity will emerge, and most analysts are still struggling to incorporate it into their short and medium-term models. CFRA research analyst Angelo Zeno expects physical AI applications to really ramp within a 3-year span, but it could be later. He says that's when we could start seeing a multi-trillion-dollar total addressable market for physical AI.
The Fed chair has really tried his best to stay out of the political fray. But I'm wondering whether you think, though, that it's inevitable that President Trump and Fed Chair Powell are on a collision course. You have the president again talking about interest rates, quote, interest rates should be lowered. He posted something which would go hand in hand with upcoming tariffs. Let's rock and roll, America. Your thought here about the potential collision course between these two men?
First of all, I love rock and roll. As you know, I grew up during that period, the 50s and 60s. So the birth of rock and roll. Look, he just 2 weeks ago, or less than a week ago, the president said he agreed with the Fed's decision to hold. And very importantly, his Secretary of the Treasury, Mr. Bennett, came out with the same thing, Bessett rather. And I think he's talking about longer term rates here because that's, again, what affects capital structure, what affects mortgages, the 10 and 30.
Powell himself said they can't do anything about long-term rates.
I agree. I've been saying this to you, Scott, for the longest time. They cannot influence those rates. Those are based on expectations of long-term future. Right now, they're rising. There is concern about deficit growth still, even though they plan to have some offsets. And we'll have to see what happens to the cost to carry for the U.S. government, which I believe is out of control. And you talk to some really, really smart people about this, not me. And you talk to Paul Tudor Jones, one of the smartest people I've ever met. And he talks about the fiscal train wreck that's underway. So they're going to have to bend the curve. I do hope they do it. I hope they're successful. And I'm praying that they will be.
I have one last thing for you. I'm sure you saw the news today of the New York Stock Exchange, Texas Exchange, the NYSE
Yes.
Texas, they're calling it. They front ran you guys. You're planning the Texas Stock Exchange. You're a special advisor. I guess they thought it was a good enough idea. They wanted to do it before you did.
No. Look, first of all, it recognizes the incredible power of the economy of Texas. We are the Empire State now, with no offense to my friends in New York. That period has passed New York. So that's the one thing. I'm going to read you what TD Securities sent out just a minute or two ago. It says, quote, the fact the New York Stock Exchange is making the change of its NYSE Chicago medallion proves that it too believes the new Texas Exchange is a legitimate threat to the U.S. listings duopoly. Add to this point, I'm quoting, the support of large investors like BlackRock, Citadel, and board members for the TXSC that include a former governor, and it's clear this new upstart means business. We think there is room, TD said, for a third listings exchange for the U.S. and expect Texas to pose a significant threat to the incumbent since demutualization in the 2000s. Overall, the U.S. is winning the global battle for listings, further suggesting a third venue for the U.S. listings may be viable. Scott, these exchanges, I have great respect for the New York Stock Exchange, but the fees that they impose are onerous. We've heard this from different companies over and over and over again. And the restrictions that they impose they were imposing in the NASDAQ, who also is moving their office to Dallas. So I think this competition is good. I think we'll be very good competitors. The NASDAQ has too many small companies that they keep trying to keep for fee purposes, if nothing else. And we expect to be competitive. Now, time will tell. We don't expect this overnight. I look 20 or 30 years out, and I do expect this exchange to be one of the most prominent in the U.S. And I expect to have a good deal of listings. I'll chair that listings advisory. I expect to have a good deal of listings. I'll chair that listings advisory committee, and we'll report back to you, Scott, once we're underway.
Yo, what's up, guys? It is February 18th, 2025. So let's see what's going on here. Got a lot of pumpers going on this morning. I saw a lot of stocks getting pumped pre-market and then into the open. Few of them probably didn't make it all the way through. So let's see what's going on. We also have some news from Intel. I'll probably talk about that some other time, but we'll see if we can get through it. So this will be a short stream, just going over some of the stocks I see from last week that are continuing this week, just like SMCI, things like that. First, let's go over to Bitcoin. Bitcoin still stuck. So whatever move we had on Friday, gave it all the way over the weekend, and now we're back in this 95,000 area. This has been the line of support of 95,500, basically. If it goes back down, let's say it shoots back down to 90K like it did about 2 weeks ago, then I would watch to see if it can bounce strong and go shooting right back into 100s. If it can't even do that, that would be a worrying sign, I suppose, for the whole broader market as well, because it's a signature of liquidity, you know? That's what we got to figure out here. Because as you can see in the NASDAQ 100, it's down like negative 0.08, 0.1%, doing nothing basically. We're stuck at the top. S&P 500 just positive 0.01, so flat, essentially flat, both of them. So the large caps are not driving this anymore. Well, we want to see if that money is moving out into the small caps, and we already see that. AAOI was up like maybe 9% at one point this morning. So let's see. Yeah, AOI, a stock I mentioned before. Yep, 9%. That's right. Another one was DNA. That was up like maybe 6%. Yeah, 7%. Okay, now it gave that back. RXRX. Okay, yeah, it was trying to get to 12%, I think. Yeah, almost 13. Yeah, 14. Okay. Gave it some of that back. Now it's up 3%, so I got to watch that one. And we got a earnings report out for WGS, GeneDx, the company name. So this one, very nice because it's above the resistance. I've been watching this since 2 weeks or something. Well, maybe I mentioned it last week, but I was watching it for 2 weeks. When it did this breakdown here in February, early February, and then it recovered last week, all of that, and then started going towards that resistance at $79. Now we got earnings. We jumped over it to 98. This thing could be a flyer, a real big flyer right here. Okay. So if you look at the monthly chart, that's it. That was the kind of like the area where I expected the most fighting to happen. It did that way back when in October, when we went all the way up to that point. Okay. And now we're trying to break out. See if it can get up to like 200, 300, 400, 800 if people are getting really, really dumb. and there's a lot of liquidity. Yep, that can happen. Let's see what another one. CKJ3 mentioned to me to look at this. Yes, I mentioned NVTS like since last year, and it's kind of like doing this sideways motion in a pattern. So let's look at the daily. You see this moving up and down, up and down. So I've been buying it around like 3, right? Every time it gets up to 4, you sell and then keep doing that. Now, okay, we've kind of did an undercut here because it got extremely weak in February. And then it'll start rising last week, and today we're popping. Okay, so this is part of the semiconductors. Now we got that Intel news, so if we can break out above here and go through 4 again, this might be it, but I need to see some volume for that. 2 other stocks that he wanted me to look at was DATS. Yeah, this kind of has a classic some kind of news probably pumped it, and then it started rolling back down. And I think the last news it had was it issued a ton more shares. It's like a penny stock type of pattern here. So hard to say if this thing will actually try to make it back up. We'll see. GEVO also kind of has this like creek pattern here. You have a pump and then you start rolling off. Very classic when you have these very quick bursts on these type of small cap companies, because they get very little volume. They have initial pump on some news, and then when it runs out of liquidity here, it goes to the resistance, or it just runs out of shorts to squeeze, and then just rolls back down the hill. So this is kind of where it goes. Something will probably try to make it go up. So yeah, I don't know. I'll have to pay attention. I think NVTS though makes more sense to me, because since it's still part of semiconductors, and this is kind of a niche semiconductor company that has to deal with like specific materials, I think, in semiconductors, that does kind of like AEHR and other stocks like that. So it's really driven by some kind of unexpected news, where they have like some sudden demand because of a new customer, kind of like AOI too in the optical area. So AOI is an optical company that has the same kind of action here. So I don't know. We'll see. Okay, so I covered those. See what else we got to cover today before I leave this and play some more videos for you. Okay, NVTS, DNA, Okay, yes, Chinese stocks. Okay, and before we go to the Chinese stocks, let me mention LTBR, the nuclear stock. So it has a nice pattern here. Yeah, I don't know. I think it's gonna goof around at 13. It tried to pump today again. Once it gets going, yeah, this thing isn't gonna look back for a while. I'm not sure if any kind of news would make it pump, but it does have a lot of volume in the past 3 weeks, I would say, because right now we're just dancing, right? You see this area here at 13, 14? Like, this is kind of where it last had a base in 2017 before it had the final pump, and that was a fake pump. Okay, that's a fake out, and then people got trapped, and it was easy for shorts to move in and take it down further, going all the way into 2020. So the last low was made during COVID, and ever since that COVID time, it's just sideways going in this like pattern here below 14. So once it breaks 14, yeah, it's going flying. This thing is going to 30, 40, 50, 100, who knows? Any kind of news that talks about nuclear energy could probably make this thing easily go up. So we haven't seen this kind of volume in a long time, right? Or even ever, maybe the whole history of this stock. LTBR, Lightbridge. So watch this one. And then, so let's look at SMCI first as well before I continue to the Chinese stocks. Only a couple of them I'm going to look at. So SMCI now is in this level here at 52. Okay, so the next stop would be 60 something, probably 66. But let's see, we'll probably have a hard time at 64, but it should try to get to 66 and maybe even 70 after this. But I might expect a pullback. So this thing might go back halfway through this bar here. So maybe it'll go back down to 42. So SMCI might get back down to 42. That'll be another time to re-enter for a swing trade. But for now, like every day, it keeps pumping like this. Yeah, you can keep day trading every day. You know, go buy in pre-market or something, and then just hope that will just open and just fly up like each time it does that. Okay, so SMCI, or you can use SMCX, the leverage version of that. So you get 26% for that same 13% move we had today. So yeah, so keep that in mind. And then anything else before I get to the Chinese stocks? No, so only 2 Chinese stocks. And let me remind you with RXRX, if you look at this chart here, I drew these squares. So RXRX, Recursion Pharmaceuticals, 12 to 15, and this stock is not just only pharmaceuticals, it does AI because it bought 2 AI companies, and so it develops drugs using AI. So that's one of the benefits. So you got 12 to 16 area here, and then you try to break through here, and then let's see if it can get to 20. That's my target right up here. So I can draw a line here showing you why I think it's 20, because this is the last time it had 2 big drops back in 2021 when it IPO'd. Bad time to IPO, right? Anytime you see the market, they try to make a lot of IPOs. This is where it's bad. And then from there, it will just drop, completely failed, right? This is during Powell's like interest rate hikes and all this stuff started happening in 2022. It's just completely just collapsed. So we're trying to break out of this area. This is a huge range. You see the smile I drew last week. This is a smile, right? It looks ugly though. The candles are quite large. Every weekly candle, it moves up and down 20% or something, 10 to 20%. But if you look at the basis forming at the bottoms of each of these candles forms a smile. It's making higher lows now. And then it broke out last week on high volume. So this is very significant. This time around, it will probably with this much volume behind it, I'm assuming there's buyers here, then this will try to fight very hard in this next time it gets up to the 15s. If it can break out of the 15s and go to 18, 17, that's it, 17, 18, 19, 20, then that's really good, really good. So this is where my target is. So you got another 100% on this stock. Alrighty, guys, done with that. Let's see. Anything else before I go to Chinese stocks? Let's go to Chinese stocks. Xiaomi. Let's see. Xiaomi. Oh man, I keep forgetting what the tickers are so long for these weirdo Chinese stocks. Like, yeah, so it's up 8%. I'll read some articles on why. Perfect. So up 8 to 9% today. XAIACY is the ticker for that one. And then also Tencent, TCEHY. Tropes asked me to look at this one. So I already had drawn 2 lines here showing the range that was made since 2018. So I drew this long ago. So I did watch this stock before. And once it touched 33 last year, 1 year ago, and then that was it. That was done. Now it's flying, flow all the way up into September, and then pulled back, and now it's doing this again. Yes, it can go back up to the 90s from this point. Okay, so we're at 64. It can go up to the 90s. That's your 50% on this stock. That's quite possible. All right, if everything goes well. So let's continue on to what videos we got to watch here. Let's see what else. Yeah, Texas Stock Exchange is going to be a big deal for sure. That's definitely one of them. Okay, let's see what I got. ARM and then biotechs. Okay, from China. Okay, good. Play that. These two.
Reportedly launching its own chip this year in a move that some say could upend the semiconductor industry. Shares are lower this morning. You see down about 4.2%. Christina Partsinevelos has been tracking the action, joins us with more on the chips. Hi, Christina.
Hi, Mike. Well, ARM finds itself really in an interesting crossroad right now. The company is known for creating the blueprints that others use to build computer chips, particularly CPUs, central processing units, which are really the brains of computing devices. Recently, there's been some buzz about a month ago that ARM was potentially buying Ampere, which is another CPU designer, which would let ARM start making actual chips instead of just selling the designs. On paper, this move pretty much makes sense, right? Because ARM already has the intellectual property, so why not build the chips themselves? But there are some major hurdles and challenges to consider. First, There's the money question. As Wedbush's analyst Matt Bryson points out, even with the exciting possibilities AI brings, the market might not be big enough to justify ARM's current valuation, which is quite higher compared to others. Even if ARM starts making CPUs for major data centers, they'd be jumping into a tough market where Intel and AMD are already well established and competing with each other constantly. They likely need to charge premium prices as well for their chips to make it worthwhile. But perhaps the biggest issue is how this would affect ARM's relationship with its current customers. So think about it. ARM would essentially be telling companies, hey, use our designs to make your chips, but also want to buy our chips that compete with yours? As Wells Fargo aptly puts, ARM would be giving up its neutral Switzerland position in the semiconductor world where everyone trusts them as an impartial partner. There's one clear winner, though, in this scenario, and that would be Taiwan Semiconductor, because they would likely become the manufacturer for these ARM chips, strengthening their position in the industry already. But you can see shares are down nonetheless, but they make a lot of chips for a lot of companies. Guys?
Well, for sure, Christina. It's interesting that ARM is thinking about going in this direction. It seems like for most industries or companies, the dream is to be like, let's get out of the kind of capital-intensive, sort of asset encumbered part of this business and just get paid for intellectual property. That'd be great, right? That's asset light, probably higher return. So what are they finding that they're bumping up against that they would prefer to have their own line of actual chips?
Yeah, the description would be asset light, and you're right, because the premium for valuation is a lot higher. Overhead costs are a lot lower. For Intel, for example, they're building a foundry business, and over the last 3 years, they spent $40 billion. In ARM's case, I think it's because so many of these other chip companies, Qualcomm, for example, are using the IP to build these great CPUs, and eventually maybe they will no longer need that particular IP. So ARM is trying to position themselves in a market in the future where they're building the chips and everyone else is competing. Should OpenAI do so? The Stargate project we've talked about. You have Meta. You have all of these companies creating their own chips. So ARM wants to make sure that they're going to still be relevant in the future.
Fascinating. Christina, thank you for breaking down the order of magnitude for the semiconductor.
All right. Okay, I don't know why it keeps like closing before like the video ends. Okay, one more here with China. See, China Pharmaceuticals. See what this one was about. This was like last week's news.
There's a China biotech gold rush as U.S. investors and pharma giants, they look to the world's second largest economy and a new quest for new drugs and new remedies. Our Angelica Peebles has taken a closer look. Angelica, good morning.
Yeah, good morning, Frank. Everyone is talking about China right now, and almost 30% of big pharma deals with at least $50 million up front came from China last year. That's up from 20% the year before and 0 in 2019. In the span of just a few days in December, Merck announced 2 licensing deals with Chinese companies, and that really got people's attention. So what's going on? Investors and industry insiders tell me that Chinese companies are creating better molecules than ever before and a whole lot more of them. Plus, in China, you can test those compounds in humans faster and at a lower price than you can in the U.S. Buyers have also figured out the business model. They essentially import the drugs they want through licensing deals versus acquiring companies outright, which is a little bit harder. And investment in China has also dried up, so more companies there have to do deals. Now, the big debate is what this all means for the U.S. biopharma industry. Different people give you different answers. Some people say this is actually a good thing, because if you could develop the drugs faster and at a lower cost, you could ultimately lower drug prices here in the U.S., and obviously there's appetite in the U.S., and obviously there's appetite for that. But other people see this as a huge threat to the U.S. biotech industry, because if the Mercks of the world can find better, less expensive drugs in China, they might not need to buy the American startups that are banking on being acquired. So this is a big trend that we're keeping an eye on, Frank.
Yeah, some interesting dynamics here. So during the Biden administration, they actually put export controls on biotech equipment to China. When we're looking at biotech, how does that compare to how at least this administration is expected to view tech? Do we have any concerns that Washington might intervene and kind of interrupt some of what we're seeing here?
Well, that's one thing that everyone I talk to has their eye on, right? This question, people compare this to almost the DeepSeek moment that we saw in AI, where you saw a company in China saying that it could do something just as good for a fraction of the price. And obviously, you've seen the reaction. You saw what happened to the stocks that day, and all this talk about in Washington about having these protectionist policies in terms of tech. And so there is a question, this concern that maybe we might see that here if you do continue to see more of these deals. At this point, I haven't heard anything, but it's something that everyone is watching very closely.
All right, interesting. After the Wu flu and now the bird flu and who knows what else they got going over there. They can test anything without any restrictions, isn't it? Yeah, they can test the viruses, and then you get the drugs, and then you get all the precursors too. And then you make all the precursors cheaply. They can generate so much cheap drugs because they actually have all the chemical processes set up for that, because they make generic drugs. Like India and China are big places where people make generic drugs, and all those precursors essentially can be used for illegal stuff too, right? You can make your own drugs like fentanyl and all that stuff, send it to the US. Great business plan China has. Anyhow, okay, let's look at some other stocks here. Zim. I wasn't planning on talking about this yet, but watch this one, see if it can break 23, and if it does very well, we can push back to 30 before earnings. So that's another potential 50% play there. And then we have what else? Mobileye, MBLY. Yeah. So this one here, Mobileye. I see this area at 18, very important. It's been fighting it, okay, for the last several weeks here. I think first time it tried was on earnings when it got pushed down to 14, and I said, "Ooh, it looks good," because the earnings reaction was initially bad, but by the end of the day, it pushed up, and then the next day it tried to get back to 18 before coming back in this halfway point at 16. And now last week it touched 16 and then slammed right back and pushed at 18. And again this week we are steady at 18. Yes, this thing could go to 30. So from 18 to 30, there you go, nearly 100% gain right there. So that's another potential stock to look at. Okay, so there's plenty of stocks, plenty of opportunities out here where the next 2 weeks, if everything goes well, you can really get a good deal. Moderna mRNA. So after earnings last week, it went down a little bit but came back. So I'm gonna keep watching this one, see if it can go back to 60 or something. Just cause I think it's run out of sellers. There's nobody selling left. And the last thing was Intel as well. Talk about Intel. There is some news today. I won't talk about it, I think, unless we got some time. But yeah, we are fighting now at this 25 level. Okay, since last week they had some rumors, and then again today we get adding the news. Essentially, this is news driven. The news guys are trying to pump this stock right now. They keep coming up with more and more rumors about Intel. So everything is just all the focus right now is trying to get this out of here, this area. So I think, yeah, this will really help the semiconductors, and this is probably being done to push up the NASDAQ after NVIDIA. So if NVIDIA goes well and we have more and more rumors from Intel, it's very easy for the NASDAQ to go up into Broadcom's earnings. Broadcom will announce earnings around, let's see, March 6th. So we have we have a good 2 weeks to push the NASDAQ up from now, right? And that will give enough time for the stock market holders to pump more stocks, sell into the strength here into March. So the Ides of March, right? So mid-March. So let's see what SMCI is another thing where they're a vehicle to push. So it'll be very easy to see this thing shoot into the 70s if that happens. So that's why I'm very concentrated on looking at SMCI from now on, since it went through earnings successfully. We got through that. We had a bad not a bad reaction, but it had a nasty fade. Okay, so let's look at the daily. So it had a nasty fade here. You see that? It started opening up at a nice spot, tried to climb to 42, pushed back, and then I got back in, right, at 83, and then I got back in again. So every time it was a good trade to jump back in at 37, and then from then on, it just went wild. because, yeah, it completed this move. This was an important thing it did on Friday, because if you can see, this was the last time it had that top back in December 9th. So this is when I got out here, because when you make that huge red candle from a resistance level, and then this time around on Friday, we didn't have that. So when you're at a resistance and you don't fade, you just push higher and end higher. So you have a open and close like this. That means it's going to go up higher easily in the next several days. So this week should be a very good week for SMCI, unless there's some crazy news that comes out. But yeah, I can see it going to 66 pretty much this week. Okay, so that's what you got to look for. All right, gonna read some articles. Let's see what we got. I think that's what we got left here. Read some articles. Xi Jinping, stuff about that. So what they did. Okay. All right, let me get the stuff out here for you. And that'll be it for today. That's quick updates. Okay, guys? So just look at those tickers I mentioned today, and they're all scrolling at the bottom of your screen. Put them on your watch list. If you haven't already from last week, these are like pretty much the tickers I was talking about last week. And then from then on, see what you can get into and try to trade your way up in the coming 2 weeks, because I think we're doing well. Oh, yeah. Something else I should talk about before we continue on. Okay. So here. Okay, let me talk about this, about the calls and put ratio, because I mentioned this quickly with HB yesterday when I was on the mainstream 24-hour stream or whatever, the main 12-hour stream, 24-hour stream. And I talked about calls. I told him I saw a lot of call buying, and this was kind of like a mini ice age. Okay. Man, StreamYard is getting slower and slower every time I use it. It's just taking up more and more of my memory. Yeah, I'll get a 32 gig laptop or something pretty soon. Okay, here we are. Let's see if it pops up for you guys. Okay, finally it pops up. So this thing here shows the ratio, okay, of the put to call ratio here, and this is just the average of it. So this thing, the first panel here that I'm showing, is a 50-day average. So right now on that average, we are at 0.5462 as of Friday. Okay, so when it gets this low, that means we have a lot of call buying. Okay, so a lot of calls are being bought right now. So usually that sets up the top for the stock market. So this would be a final top here. So every time or we go the other way, 0.8, where there's a lot of put buying, that marks the bottom, the final bottom. So here we're at like a pretty nasty spot, because it will be very easy for the news guys, the media, somebody somewhere to crash the market. And they're just waiting. They're biding their time, waiting for the right moment to strike and then slam the market back down. Okay, so right here, if we see this is just a 5-day. We're at a low area, pretty low compared to how we were for a long time, but still not as low as the COVID days. Okay, this was when everybody was buying all kinds of calls, because you didn't need to be an expert on options. All you had to do was pick a stock. You can just blindfold yourself and just throw darts and go pick a stock, buy a call, and it would just go up. So it was easy. The people that were brain dead the most money, because they didn't need to understand what was going on. If you knew too much about options or how the market is supposed to work, you've probably been frustrated. Like, how come it keeps going up? How come it keeps going up? And eventually that died, right? First with the biotechs. The biotech sector was the first to die out in 2021. That stopped going up. And then people moved to other places that were still going up. But that was the first sign. That was the warning shot in early February, okay, of 2021. And then by late 2021, there was a last pump in big tech, all the big tech, large cap stocks, and then that was the end. That was the final end. But from 2020, you could make a lot of money from that March point, and you just bought anything, it would go up. So that was an unusual time where it went below 0.55, the put to call ratio right here. Okay, very low puts, a lot of call buying. So very rare for it to happen. So you had 2 years of unlimited money you could make. Now, at this point, we're at this point again. So do you think we're going to see this situation? I don't think so. This 2021 situation, I don't think so. But here, if we go down here, you can see like this is extreme, right? So this is like a 250-day moving average. You can see how extreme those days were in this. And we are now headed to that area again. So we have went below 0.6 on this 253 moving average line. And it can go lower a little bit, right? Because we've been here before. We've been to the point where this thing could go down to 0.58. And if it can do that for the next 2 weeks, 3 weeks, maybe you're lucky, you get 4 weeks of good times, then that's when the market's going to go stupid, real stupid. You're going to have a real big pump up. And that will be the setup for the big drop later. All right. So that's why the market's getting happier and happier. And this is the end. That will be the end, because I don't think we're going to repeat 2021 or 2020 even. We're not going to have 6 months of goodness or a year of goodness. No. This is probably just going to be a month at most. And then you'll feel the pain. Yeah, then you'll feel the pain. And it'll probably feel more painful once we get to taxes, because people will be panicking and saying like, oh shit, I got to pay taxes too in April. When April comes around, then people are just going to cash out, and it will make the drop even worse. So it will make everything feel terrible. So when you get a good high, the come down of that high will be awful if they time it correctly. So anybody that's quote unquote manipulating the stock market, if I would just do it that way. That will give me a cheaper price for all the stocks to buy up in the summer, right? In May, like early summer and June, and then see if I can ride that until August, September, and from there we'll see how that goes. Okay, so that's my plan for how the market moves. So like I said 2 weeks ago, I said I think the market's going to go up a lot higher than people expect and then drop. That's just how it's going to be. All right. Okay, so let me read these dumb little articles. All right, and then we'll be done. That's it. About 1 hour here. Okay, very quick. But yeah, go back to the beginning of the stream and watch all the little tickers I mentioned, and you should be able to make some money in the next coming 2 weeks at least. All right, Xi Jinping. What did Xi Jinping do? Xi Jinping, this is from Financial Times. Xi Jinping meets China's tech titans, including Alibaba's Jack Ma. Beijing hosts business tycoons as authorities seek to reinvigorate the economy. So Chinese President Xi Jinping, met some of the country's top entrepreneurs, including Alibaba's Jack Ma, on Monday. All right, that was yesterday. As Beijing looks to reinvigorate private business and drive stronger economic growth. Okay, Ma was the most prominent victim of Beijing's tech crackdown. Oh, you remember those times? That was just after COVID. So they were going after every tech tycoon. It's kind of like having the U.S. go after Zuckerberg or Bezos or anybody like that, right? In recent years, and has largely been absent from public view following regulators' dramatic intervention in late 2020 to cancel the planned record and initial public offering for Ant Financial Group, because Alibaba was about to split into different companies. Okay. So his presence at Monday's forum, where she gave an important speech, according to state broadcaster CCTV, symbolized Beijing's desire to present a more positive disposition towards the private sector, analysts said. The meeting's purpose is to tell the private sector, we want to support you. We need you to boost tech innovation and consumption, said Zhang Xiaoyan, professor of finance at Tsinghua. Oh, that's a good university. Tsinghua University, speaking at the Asia Securities Industry and Financial Markets Association in Hong Kong. She added that the government wanted to inject confidence in Chinese companies. Beijing has been working to improve the business environment in China and strengthen economic growth after waging a years-long campaign to rein in the influence of big tech companies. So during that time, they popped their bubble. So the stock market tried to move up and it popped them. Okay. That damped business confidence. Other notable tech executives present at Monday's meeting include Robin Zhang, founder and chair of leading battery maker CATL, and Meituan boss Wang Xing. Huawei founder Ren Zhengfei and Xiaomi, yep, there, I talked about that stock, didn't I? Chief Lei Jun addressed top officials, state media broadcasters showed. Tencent chief Pony Ma and Wang Chuanfu, chair of electric vehicle maker BYD, I talked about that one too, and Wang Xingxing, founder of robotics group Unitree, were also present. China's slowing economic growth has weighed on private businesses, while executives have faced intensified scrutiny over alleged corruption and a spate of detentions by local authorities. In the past, Xi has used meetings with business leaders to promise tax cuts and a level playing field with state enterprises. The emergence of pioneering artificial intelligence models from startup DeepSeek has helped renew interest in Chinese technology and ignited a bull market in the main benchmark for the country's tech stocks. The Hang Seng Tech Index, a benchmark of the 30 top tech companies listed in Hong Kong, is up 24% since the start of the year as investors respond to DeepSeek's breakthrough and Beijing's positive messaging on the tech sector. All right, very good. All right, I'll read this a little bit of this Economist. I think economists usually have very long articles. Why Xi Jinping is making nice with China's tech billionaires. Jack Ma's rehabilitation may be the most lucrative of all time. Written February 17th, yesterday, 2025. China's Communist Party has a history of purging, then welcoming back senior officials. Deng Xiaoping was purged 3 times before leading the country out of Maoism in the late 1970s. Some cadres are welcomed back years after their death. Jack Ma, Alibaba's founders, received the modern version of a purge in 2020. The initial public offering of its fintech company, Ant Group, was canceled. Alibaba was probed and handed a record fine. Mr. Ma withdrew from public life. Now, however, he seems welcome once again. On February 17th, Mr. Ma and a handful of other entrepreneurs met at a symposium in Beijing with Xi Jinping, China's supreme leader. Many see this as Mr. Ma's rescue from the wilderness and a sign that after a prolonged crackdown, private sector tech is back in favor. It certainly has the makings of the most lucrative rehabilitation of all time. On February 14th, Alibaba's share price rose by 6.2% on rumors of the symposium, adding about $18 billion to its market value. Those of Tencent and Xiaomi, 2 other tech firms, rose by 7%. That comes on top of a rally in recent weeks. Shares in Hang Seng Tech, an index of the 30 largest technology companies listed in Hong Kong, have risen by 23% in the past month. Those in Alibaba have surged by over 50%. Is a revival in private sector sentiment at last underway? In large part, the rally has been prompted by DeepSeek, an artificial intelligence firm that has managed to keep up with Silicon Valley, even without an ample supply of American chips. Analysts at Bank of America have compared it to Alibaba's IPO in New York in 2014, which caused a boom in innovation at consumer internet firms. DeepSeek, they think, could have a similar effect. Many companies are already adopting technology. Tencent, an internet and gaming group. Oh, yes, Tencent. Yeah, so Tencent is where Discord gets its money from. All right. And yeah, well, that's something you got to think about. So it's said to be testing it in Weixin, an application universe for messaging. I never heard of Weixin. Okay, payments, shopping, and entertainment in the hopes of creating an AI super app. AI could also boost demand for cloud services providers such as Alibaba, Huawei, and Tencent. They, in turn, will have to invest more in building server farms, benefiting the suppliers of AI data center components. Alibaba is also said to be working with Apple to put AI capabilities into phones sold in China. Yet, despite all that, wider sentiment has still been weak. The Business Confidence Index, a monthly survey of more than 300 senior executives at corporations across China, showed slight improvements in January, but several important components of that index, such as the outlook for corporate financing and inventory, are still contracting. In January, compilers of the index that tracks business sentiment at Chuang Kong Graduate School of Business in Beijing surmised that fairly significant levels of instability continue to inhibit China's public sphere. That helps explain Mr. Xi's appearance at the symposium. According to reports of the meeting, he underlined the importance of the private sector for China's economy and acknowledged some of the problems facing it. Mr. Xi's reign has been an experiment in how to best guide entrepreneurs while limiting their influence over policy and society. Officials have never found a comfortable balance. Between 2013 and 2019, big companies dominate investment in many areas of economic growth, putting officials in the passenger seat of development. The crackdown in 2020 reversed things sharply, wiping around $2 trillion off the value of Chinese stock markets in the process. More recently, the party has sought to guide entrepreneurs without extinguishing their innovation. This works for some companies, such as Huawei, a telecoms giant, Cabricon, a chip designer, and iFlyTech, an AI company, but the result is often a murky hybrid. Given all this, the love-in can only do so much to restore sentiment. Chinese private sector elites want more than symposiums. Big problems afflict their companies. For example, Wen asks a Hong Kong-based venture capitalist, might regulators loosen the controls of IPOs? Since the crackdown, approval processes for listing overseas have been introduced. Startups such as Shen, a fast fashion firm, have been forced to seek informal approval from Chinese regulators on national security grounds. Seriously? Clothing maker. Okay, the securities watchdog has taken upon itself to manage the listing expectations for some companies, reporting halting the IPO in Hong Kong of a tea and ice cream shop last year because valuations were too low. Other problems abound. Rather, like many tech firms, the financial system has also become a public-private hybrid. China's venture capital and private equity industries have been permeated by the state. For many startups, state capital with irreconcilability, different goals from the professional investors has become the main source, main form of funding. Businessmen once laughed off the influence of Communist Party cells in private firms, which have been around for ages. Yet over the past 5 years, these cells have amassed much more power. There are a few signs this trend will reverse. In some quarters, the return of Mr. Ma has been portrayed as a big win for the private sector, or even a concession to it. But it might also be seen as a victory lap for Mr. Xi. Over the past 5 years, China's entrepreneurs have become much more subservient to the Communist Party. They must play by Mr. Xi's rules or face the consequences. The symposium is a confirmation that China's once mighty entrepreneurs have fallen into line. Oh, very pessimistic. Very pessimistic. Interesting. All right, guys, let's see what's going on here in the markets. I don't know. See what, if anything, changed. Oh, I was going to talk about cold. Oh, yeah. Let's see what, if natural gas is finally ready to take a little dive down. I don't know. It was about to do that, like over the weekend. So, long weekend. Yeah, on Monday, when the futures opened Sunday to Monday, we had little dips in natural gas, and it looks like it recovered. So I don't know if I want to short it. So if we're going to short it, you can use cold, KOLD. That's the ETF to short that. Okay, so let's see how it goes. SMCI is still trying to get back up, it looks like. All right, let's see. Natural gas, yeah, it's right back up here again. So this is the spot price. So this doesn't really reflect the futures price right now, but you can see it dipped yesterday, negative 4.41%, and then now it's recovering. Okay, now it's up 4%. All right, let's see how much it's going to keep banging its head on here before. So I bought a little bit when it got a cold, so I use KOLD. So I bought a little bit on Friday, Thursday-ish, just a small portion. Not really confident that this thing will reverse, but let's see. So if you bought around 25, you'd probably be cool. Just a little test, a little tease. and see if it can go run back up to 30s or something. Because yeah, and then we'll see how it goes from there. And then by March, you flip to boil permanently. So no more flipping and flopping, because here you're just like rolling around back and forth. So yeah, once this thing pulls back, maybe to 58-ish, 55-ish, if you're lucky, get back in and see if we can go to 100 plus by summer in boil. All right. So that we'll see how that goes with natural gas. And I'll have to talk more about certain natural gas stocks as well, like EE and LNG and stuff like that. Yeah. These things, yeah, we got time. I wouldn't be jumping in to buy this. LNG got slammed, yeah. And then, yeah, there was some other one. I forgot. ET. I think this was a pipeline. They had earnings. Yeah, okay. Yeah, you can wait. Just focus on the tickers we were talking about in the morning, okay? All right, guys, about 50 minutes. Very good. So like and subscribe the stream and the channel. And then you can contact me at crack, CRACK, at JGHB right here. Put that up. And then you can go to Streamlabs to do your support, streamlabs.com/TheUrbanLandord. And then we have Portia, right? You could do like Cash App, $PORSHAJAYE, and PayPal at PORSHA@jghb.info. Also her email if you have any thoughts or things about it. And then, yeah, thank you very much. I'll see you all later.
Feel like I should go. 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 Feel like I should. Feel like I should go.